All right, welcome back to our show. We are joined with our good friend Tucker Maxwell with Guild Mortgage. Tucker, welcome back. Today's topic, we're talking about inflation and interest rates. We're going to talk about the notorious Silicon Valley Bank as well. Let's just kind of talk, in my monologue there at the beginning, what did I get right? What did I get wrong?
I think you nailed it. All of it. I love the analogy of finding something that you love and buying because of that, and then worrying about rate later. So date the rate is definitely something that's still prevalent, and then the credits. So while the market is still a little softer, the opportunity to help buyers with monthly payment through temporary buy downs or other closing cost credits. That's what we're seeing on almost all transactions still to today.
Yeah, that's awesome. So we're going to talk about the up and coming CPI report. Yeah.
Yeah, it actually was released on Tuesday.
Oh, okay. Sorry.
Yeah, yeah.
What did it say?
It told us that inflation, so consumer price index tracks, a basket of goods that the urban family purchases on a regular basis. And that's what we've been really using to determine, is the Fed being impactful by those increases? And it came out at 6%, which is down from what they expected. And that's the eighth month in a row, actually, that we've seen inflation come down. So it wasn't moving fast enough, which is why the Fed continued super aggressive increases. But it is showing that inflation is moving in the right direction, which has been a positive thing for mortgage rates.
What did they say is the cause of that CPI going
That's
down?
a great question. It depends on who you ask. I think the Fed would like to think it's all of them in their increases. But it could be a variety of reasons. It could be that consumers are pulling back. It could be that they're looking for alternatives. It could be supply chain changes and people just getting back to normal manufacturing. It could be a lot of things, but we're seeing overall that it's having a positive impact on the price of goods.
Okay, awesome. So now, how is that relevant to interest rates, though?
Yeah, so typically we track the bond market, and what is the 10-year treasury or the 30-year treasury doing, and that would help us determine where home loan rates are going. But to really simplify it for your viewers, Dan, where inflation goes, interest rates will go. So if inflation goes down, mortgage rates should go down. If inflation goes up, home loans rates are going to go up. So it's just a really easy way to simplify it for consumers to know that if inflation is down, it puts less pressure on the Fed to raise rates. Therefore, they can take their foot off the gas and rates will come down.
Okay. So, what is the Fed expected to do now with these inflation numbers?
Yeah, so if you asked me that question last week, we would have said there is a greater than 50% chance that they were going to do a 0.5% increase in their upcoming meeting. But now, due to the bank failures, or Silicon Valley Bank especially, those banks that are failing are pointing their finger directly at the Fed and saying the reason we are failing is because of the sudden rise in rates and that we weren't given time to adjust. And so they're putting pressure on the Fed to stop those increases. So now we're expecting the Fed to do no increase at their upcoming meeting, which should allow us as mortgage lenders to settle in the rates.
Okay. So, do you think that this rate pause will last maybe more than one cycle?
I'm hoping so. I think it's going to be in tandem with the future inflation data. We still have the producer price index coming out. As long as those are trending in the right direction, it will give the Feds less pressure to raise rates. And so if those things continue in the direction they're going, we should be fine. But if the Fed
When do,
stops the increases and inflation goes back up, they could have to start making increases again.
when do producer interest rates come out?
I believe it's Friday. It's
Or,
this.
I'm sorry.
Yeah,
What
within
did
the
I say?
next week.
Producer index.
Yeah, producer price index.
Producer
Yeah.
price. So that actually, the funny thing is that I don't hear a lot of people talk about that because, inflation is too many dollars chasing too few goods. I'm guessing that this index is about how much production is being done. Correct?
Exactly. Yep.
Yeah. So
Exactly.
that's the other thing, that if it's up, right? So if that index is up, that means we're producing more,
Yep.
and that would be good for lowering inflation.
Yes.
which would in turn lower rates. Cool.
Yeah.
And that comes out on Friday?
I just looked it up, and apparently that came out this week too. So
cool.
CPI and PPI, both, but they come out monthly. Both of those reports are monthly.
So what does that one say then?
That's a great question. Let's look.
I can fill a little time with a good story while you're looking that up.
Yeah. Decreased 0.1% in February. And so, yeah, very minimal decrease.
Okay.
0.1%.
What we want to see is an increase for positive outlook. Okay.
Yeah.
Okay.
Yeah.
But you said 0.1%?
0.1. Yeah.
Yeah. That's pretty small too. That's almost level, right?
Yeah. Yeah. Because it tracks the demand of consumers.
Okay. Any other reports we should be watching?
I think that's really it. I think just, to really simplify it, just watch these inflation. If you hear that inflation is trending in the right direction, that's good news for home loans. If it's trending in a bad direction, then home loans are going up.
An interesting thing to kind of look at as a buyer out there is what is the rate of new applications, because that's going to show you how much competition you're having. So were applications up or down in February?
Down. January was up significantly. February was down.
Okay, so that tells me that if you're a buyer out there with good news in the interest rate aspect, it might be really good to get your taxes done so that you can fully qualify. You don't have to, but I highly recommend it. Getting those things in order, because it'll make your underwriting easier. But basically what I would glean from this is because applications were down in February, you may have less competition right now, and that's a good news for you.
Yeah, I would echo that. I mean, buy while the rates are up. You're going to have less competition, and I would try to avoid that summer market if you can. Families with kids are definitely going to wait till the summer, so things are going to heat up.
Yes, absolutely. More buyers get out there in April, May, because they're trying to get secured for the following school year. Tucker, thank you so much for coming on. We appreciate your wisdom. As always, people can reach you at the number going below here, our 425-757-9202, 425-757-9202. Thanks for coming on, Tucker.
Yep. Thank you, Dan.